also reported their numbers just a while back, largely in line with estimates. To discuss more, Vivek Chand Sehgal, the chairman of the company, joins us now. Mr. Sehgal, I wanted to get a sense on the consolidated numbers. Sales growth of 38% in the quarter, but the EBITDA is up less than 30%, which is at a slower rate. Wanted a sense on where the pressure is coming in from?
The pressure is not there. Actually, we are, in the last quarter report, we had given a lot of new plants that are coming up. So they're all in the fructification stage at the moment. So obviously the startup costs and all those particular things will be a little bit higher. But also the car companies are ramping up for higher numbers. So there's always that particular lag that comes in here and there. But we have shown the highest ever quarterly revenues ever for our group at 15,282 crores. Our net profit is up by 24%, and the order book is 1,30,000 crores. I mean, a phenomenal response from our customers to us.
Mr. Sehgal, so what you're saying is that the fixed cost which is associated with the new facilities is coming into play here. You've had to account for them in your books, but you have not been able to maximize the revenue from it. And this would normalize?
So what actually happens is greenfield is a little bit different from the acquisition that we do. When we do an acquisition, everything is happening from day one. You know, you're in full production, you're taking over your all this thing and all that. But in the greenfields, whenever the greenfields come together in a bunch, because of the growth which our customers are expecting us to take care of, then you do have a quarter, 2 quarters, 3 quarters, where you will have a situation where the full production is not there, the people are being trained, a lot of rejections, a lot of scrappage, a lot of full costs, but no revenue. So it's a part of life. We don't worry too much about it. And I think it is it's just a matter of time when the whole thing will come right. Yeah.
Okay, well, the reason we're asking is because these startup costs have gone on for many years now, and we just wanted to know when things would normalize.
I think different plants, different verticals will come into fructification. I think the numbers would somewhere around next quarter, the next quarter after that, could still be seeing some kind of effects. But by and large, from 2019 onwards, or 18, 19, the last 6 months or things like that, things will improve phenomenally.
Wanted some sense on your order book and realization, Mr. Sehgal?
We will not accept orders which are not meeting our threshold or the benchmark. And that's why we are growing in multiple this thing. And in some this thing we don't want to grow because we've already hit a particular size and we are making good money over there. And there is no need to take orders just for the top line.
You've also seen some excellent growth in terms, a proportion of your revenues from outside India and within India. Do you see that equation changing anyway going forward? I mean, what can we expect the ratio to be for the two segments?
It's very difficult to predict because it all depends upon the acquisition. We are at the moment we are going through Radel's acquisition. That itself adds plus 1 billion euros to the top line. So that's straight away, the effect outside India and inside India will get disturbed a bit by that. But we really don't worry too much about it because these are all things that are already happening. So it doesn't bother us in any way.
Okay, so are you giving some kind of guidance for the fiscal in terms of revenue and profitability?
So we have a very clear target which was established in 2014-15. Which was basically top line for Motherson Sumi at $18 billion US, and rose of 40%, and we are absolutely on track for that.
Okay, so on track to achieve that $18 billion target by FY20. So you spoke about a 40% ROCE, but what kind of EBITDA margins would you be targeting? I ask you because the startup costs have impacted your margins in some of your verticals. Will that continue?
I think depending upon every single product line, we have over 1,800, 2,000 different products that we are making. So very difficult to start working on margins suddenly. We always guide you on ROCE. Our ROCE target is 40% ROCE. This particular year, I think it probably would be around 27, 28%. So we are absolutely in the direction where we want to be, and hopefully in the next 2 years, you will see the ROAS coming as close to 40% as possible.
Okay, any development that you can share on SMP?
SMP, I told you 3 new massive plants are coming of SMP at one time. This is the Zilatepec in Mexico, Kecskemét in Hungary, and Tuscaloosa, which we inaugurated last month in USA. And together these 3 companies will add a revenue of €1 billion. So it's a huge step from our side, but it gives a tremendous amount of confidence to the customers that Motherson, an Indian company, can deliver in 3 different geographies. Such a huge growth and such a huge opportunity can be given and taken care of by us.
Okay, so 3 new plants coming up from SMP and €1 billion. Could you share details in terms of timelines? When will these plants become operational?
I think the full effect of all these 3 plants will come somewhere around 2019, maybe September or something. At the moment, it appears like that. So these are all work in progress. So we will go through every model, because every car has to be homologated. Every different type of car, variants, and all these things have to be color matched, color coded, and all these things have to be done. So that takes time. As and when the car maker is going to launch, we are ready, absolutely ready for them.
Okay, so is the market right for any inorganic opportunity, and are you looking at something?
We do have, I've just come back from Europe last night. We are of the 3, 2 are very close. So just a matter of time, then I'll announce it in CNBC that, you know, we've taken over these companies as well.
Mr. Sehgal, always pleasure talking to you. Thanks a lot for your time today. Now the stocks